Hi everyone, welcome to our latest stock analysis. But before we start today, we just want to say that today we'll be looking at 10 stocks. This might be a bit of a longer video, but before we start with the analysis, we just like to point you out that in the last few weeks, we did an interview with the village trader. His Twitter handle is there in the description. That link to that interview is also in the description if you would like to follow our trading journey and listen to our approach to the market and how we do risk management. I would like to point you out to that interview. The link is there. And also, we like to give a shout out to conventional media who gave us a very positive comment on one of our videos, Nature versus Nature. Basically, he just encouraged us to continue to upload videos because we believe that he appreciated the work that we do for people. So yes, thank you very much, Conventional Trader, for that feedback. We really appreciate it. We'll continue to upload stock market analysis. We'll be looking at different stocks as we've usually done, and we'll continue to use the technical analysis approach. So we'd like to thank you very much for that comment, and also we'd like to thank our subscribers as the number of subscribers is growing a bit by bit. We are currently sitting at 195 subscribers. We'd like to thank everyone that has subscribed so far. And for those people who watch the videos but haven't subscribed yet, we'd like to ask you to subscribe. And also, if you like the content, please click the like button. We will start with the risk disclaimer. Everything that is shared on this channel does not constitute financial advice and it shouldn't be treated as such. Any shared ideas or anything is not financial advice. Okay, the first stock that we are looking at is ArceloMittal. As you can see, the stock has been trending lower for quite some time. And then somewhere around March 2020, it started to consolidate, building a nice base. And then eventually it broke out of that base at this level here. Let's see. Yes, it broke out of this level. Let's try to get it perfectly. Yeah, so it broke out of this resistance level. As you can see here, then there was a retest of this breakout level. Since then, the stock has been trading higher, making a couple of consolidation a bit and then moving higher. So now if you missed out this breakout or the retest or this small trading range, another opportunity, as you can see here, the stock had a bit of a consolidation last week and then it broke out of this level. So if you were to buy the stock here, it's near the breakout level. So if you buy here, a stop around this level, maybe 160 per share, is not a bad place to set a stop. Meaning, if the stock move against you, probably the move then it wouldn't work out. Otherwise, we expect the stock to either continue to trade higher on its current path, or else the stock will just retrace a bit to retest the breakout level and then continue to trade higher. So yeah, we'll be monitoring this, but at this moment we think that the stock is already near an area of value, so it's worth buying at this level. We've covered Blue Label Telecoms for quite some time now, having bought the stock somewhere near 280 per share. Currently, the stock is trading at 44 rand 84 cent per share, not 48 rand, 4 rand 80 cent per share. So now, as you can see, if you just zoom out, the stock is currently at this level, which looks like a resistance level. It's not a very big resistance place, but yeah, it's around this area. So now we're waiting to see if the stock is going to trade above 5 rand per share. If it does trade up above 5 rand per share, so it opens an opportunity that it can continue to trade all the way higher there. But at this moment, the way that we see it, is that we already spoke about this in our mentorship program. The stock consolidated a bit and then it broke out of this level. So now we took a small position there with a stop just below this consolidation level. So now waiting to see if the stock is going to continue to trade higher. So if it does, we will stay in that position. But if it just retraces back anywhere near 425 cents per share, we will exit our current position. Let's get this one of the way. And another stock that we've been talking about as well is Coronation Fund. As you can see, the stock has been consolidating. Just forget about this tiny drop there. But the stock has been consolidating for quite some time, and then we saw it breaking out of this level. As you can see, it broke out and then there was a retest. So currently the stock is trading somewhere in 52 rand per share. So if you missed either the breakout or the retest, you can still buy the stock. Just keep in mind that if you buy at this level, it's far from an area of value, and if you use position sizing, then you can be able to manage this position accordingly. But as you can see now, if we zoom out, the stock has a potential to continue to trade higher all the way up to 56 rand per share. That will just be a short-term target. But for people who want to buy and hold, this is one of the companies that consistently pay dividend. So if the stock happens to break above 56 rand per share, it's a stock to consider to have in your portfolio. Another stock that we're looking at, it's Cashbuild. As you can see, last week there were plenty of breakout and retest, either new breakout or some of the breakout happened the week before. But as you can see, we've been having this position on Cashbuild for quite some time now. We're still holding this stock. At some point, the stock broke out of this resistance level. It has since then retested this level, is currently trading the way higher then. So if you were to buy the stock at this level, a stop level just maybe near 250 rand per share is not a bad place to put your stop loss there. And then we will see if the stock is going to continue to trade higher and maybe possibly reach this previous level somewhere around 325 330 rand per share. That would be a short-term target. Otherwise, if the stock break out of this level, as you can see, there is a bit of a resistance somewhere near 425, and it can go all the way up to about 520 rand per share. But then nobody knows how long it can take the stock to do that. But at this moment, we're just looking at it from a perspective of a very reasonable risk to reward ratio. Then another interesting stock like ArceloMittal, it's Hulamin. We at this moment we don't have a position at this stock. It's because there's just a lot to trade on the market. You will take some positions, you will miss some positions. So it's life, it happens. But now the stock is currently back at this previous swing high. As you can see, if we just zoom in there, let's to put it there at the high, the stock did attempt to break out at this level, but it came back to close at this range. So now if you want to hold it for a long term, you'll probably have a stop somewhere at this swing low. But as you can see, it's just a very long shot because the stop level is going to be somewhere around 1 rand 60 per share, and the stock is currently trading at 2 rand 48. Otherwise, you can just adjust your stop, put it somewhere in here, and then we'll see if the stock is going to trade higher, going to the way to about 3 rand per share. And eventually, if there is enough momentum in the market, you can see the stock push all the way up to 4 rand 50 per share. So this is a stock that we'll be looking at. Basically, if your stop is somewhere near 1 rand 90 per share or so, and you are buying near 2 rand 50 per share, going to about 5 rand per share, by the look of things, that's about 1:3 to 1:4 risk to reward ratio. So it's worthwhile to look into this stock. Okay, before we continue, we like to bring to your attention, we also have another YouTube channel called Zanzi Investor. In that channel, we still use applied technical analysis approach specifically systematic trend following. But there we introduced the element of dividend yield. Basically, we are looking for stocks that pay higher dividend yield. I mean, that pays higher dividend. One of the criteria that we use to filter out those stocks is dividend yield. So we're looking for stocks that we can hold for a very long term. Well, long term, it's just a thing. Nobody knows how long it's going to be. But basically, for as long as the stock is meeting our criteria and our stop level isn't hit, we'll be holding those stocks. And between the time that we buy and the time that we exit, we expect those stocks to pay us reasonable dividends. As you can see, we've already uploaded 2 videos. One of the video is an introduction video to say what we're talking about, and then we have a video talking about dividend yield and some of the challenges that you can expect if you use dividend yield as a filter for stocks. So yes, please do check it out. That channel, Mzansi Investor, is there. Please also subscribe to that channel and click on the notification icon, because from now on we'll be also uploading a lot of videos in that channel as well. So yeah, please subscribe to that channel. Okay, back to the analysis. We're also looking at CAP Industrial in terms of the market structure. The stock is on an uptrend. As you can see, we see a series of higher highs and higher lows. It's still moving forward. But just a side note, as far as we know, CAP Industrial is the holding company that owns Greyhound. Last week, we saw that there was an announcement by Greyhound saying that they'll be shutting down the operations. So now there are still other companies within this holding group. We expect that some of those companies, they will do well. It's a sad thing what that will happen with Greyhound, especially, I mean, in South Africa, the level of unemployment rate is very high. So it's a sad thing to happen. We hope that all the stakeholders will be able to meet and see if they can save jobs somehow. We also expect that if Greyhound in the end they do sell the business, there will be new people who will buy the business and continue to operate, so that people can still have jobs, so that people who use Greyhound services can still be able to get such services. There are a lot of other players in that field, but at this moment we are looking at it from the view of jobs. It's not about having a lot of bus operators. Okay, back to the market. You can see now CAP Industrial, it's about to reach this level. Previously, we spoke about the stock breaking out of this level, of which so far that breakout had a bit of momentum there. It was sustained for quite some time. So now, as you can see, the stock is currently reaching a new highs. It's a new 52-week high. So now you can either wait for the stock to start trading somewhere around 450 per share, which would be a confirmation that the stock has broken out of this resistance level. And then you can buy the stock there and set your stop just below here around 350 per share or so, which will be a bit higher. I mean, the price difference is going to be a bit bigger. But if you look at the bigger picture, we're not saying that the stock will continue to trade to the previous higher prices. But if we're to speculate and say it might go back to that level, we think that in terms of risk to reward, it's worth it. So now at this moment, we already have this position in our portfolio. But if you still don't have it, you can either wait for the stock to trade again above at 450 per share, or maybe wait for a pullback back to this breakout level somewhere around 380 per share. And then if the stock shows that it's rejecting lower prices and start to trade to higher, then you can buy the stock there. And then we have a penny stock for the people who love penny stocks, but we didn't just choose a penny stock. This stock has reached a 52-week high. As you can see, 52-week, it's about a year. So if you go back all the way to 2020, the stock is currently trading at 67 cents per share. That's the highest it has reached in the past 12 months. So at this moment, the stock has been doing very well for some people. As you can see here, the stock broke out of this level. So now it's currently trading higher. If you want to buy the stock, you can buy at this level and maybe either have your stop level somewhere near 55 cents per share, or even somewhere here around 40 cents per share, and then just hold the position until something happens. But by the look of things, we see that there's a potential for the stock to continue to trade higher and potentially reach 1 rand per share, but also there's a room for more. So yeah, well, you just have to do your other due diligence, such as what kind of business Merafe Resources is involved in, what kind of a miner it is. We can just say that it's a miner stock, but you don't really know the kind of business that they're involved in. But also remember that our analysis is just a technical analysis. We don't go into fundamental analysis. Basically, we don't care what the company does. The only thing that we want to see is price action. And then the other stock, it's Mr. Price. As you can see, Mr. Price, it's currently now above this resistance level, but also the resistance is not far. As you can see here, there's also a bit of resistance near 195 rand per share. So now you can either buy at this level, just expect that bit of resistance around 195, but once that resistance is cleared, well, there's a potential that it continue to trade all the way higher to 260 rand per share. So it's up to you whether you buy it now at 185 and have your stop somewhere around 170 per share, or you just wait for that stock to clear the 200 rand per share somewhat resistance level, and then see if the stock is going to continue to trade all the way to 260 rand per share. And then this is another small stock that we once touched somewhere just before the end of 2020. It's Stadio Holdings. As far as we know, it provides a bit of private education. As you can see, the stock is now starting to trend higher bit by bit. And then as you can see here, there's a bit of a resistance level that the stock might experience. So now it's something to keep in mind that if you buy here, there might be a bit of a resistance around 250 per share. Otherwise, you can just wait for the stock to maybe start trading above 260 per share and then buy your stock there and set your stop below 230 per share, or even at 2 rand per share, and then see if the stock is going to continue to trade higher. But at this moment, it has a nice technical setup. It's something that we are looking at, something that we're looking to add into our portfolio. And then the final stock of the day is Telecom Group. We've had this stock for quite some time now. As you can see, there's this resistance level. Okay, so it's been on a downtrend for quite some time, and then started consolidating and coming back to test this resistance level. So it just tried to reach this level at 38 rand per share, but the first attempt it failed. It traded lower. Then sometime in July 2020, it tested this level again, of which it failed. And then, well, somewhere around November, it didn't really reach this level. But last week, the stock came back around 38 rand per share. As you can see, it just touched that level. So now by the looking at the volume analysis, you can see in the past 3 days, which would be Wednesday, Thursday, and Friday, there was a bit of a volume there. That there are some buyers of the stock. So let's see. The resistance level is somewhere about 38 rand 45 cent. Yes, the resistance level is 38 rand 45 cent. So you can just wait for the stock to either trade above 38 rand 50 or 38 rand 60, or you can just wait for the stock to trade above or near 40 rand per share, which will give you a nice entry level there. And then if it does break out, it's either the stock is just going to break out and then continue to trade higher, or else the stock will break out and come back and retest the breakout level and then continue to trade higher. Those are two potential scenarios. We don't know which one will play out. You also have the obligation to do your own analysis and make decision based on your analysis. But this is what we just seeing here. We would very much like to see the stock breaking out of this level and then start to trade higher, because we see that there's more room for growth if the stock does break out. So yeah, that's it for this week. These are the stocks that will be looking to trade to either to add into our portfolio. We touched on ArceloMittal, Blue Labels, Telecoms. We spoke a bit on Coronation Fund, and that it's one of the good dividend payers. We'll touch this stock a bit more on that channel, Mzansi Investor, because there we do spend a lot of time talking about investments and just longer holding periods. And then we also touched on Cashbuild, Hulamin, which is also interesting as ArcelorMittal. And then we touched on Cap Industrial. We also hope that whatever business crisis they are going through is something that would be sorted out with respect to Greyhound bus services. And then we touched Merafe Resources for the people who like stocks that are trading below R1 per share. Yeah, well, we don't discriminate on stocks. It doesn't matter whether it's a penny stock or not. As long as we see the price action that we want, we can dive into that stock. And then we touched a bit on Mr. Price, Stadio, and Telecom Group. So we hope that you, as the viewer, you'll be able to make your own buy and sell decision. We're not making any buy or sell recommendations. We're just sharing what we see on the market. We also believe that you also doing your part as a trader or as an investor. And once again, thank you for watching the videos on our channel. If you like the content, please subscribe if you haven't subscribed yet, and also please click the like button. If there's something that you would like us to touch on, just leave it on the comment section. We'll answer to that. And then again, we would like to remind you about the interview that we did with the village trader. The link is at the description there. We've covered it. And also feel free to check his Twitter handle or Twitter account. I think there on his Twitter handle, he has details to his YouTube channel as well. If you're also interested in technical analysis, just from a different perspective, do check out his YouTube channel. Thank you.